Truls, Trøan, who heads investment banking at Clarksons Platou Securities, and has been a banker in the maritime space for 15 years, after McKinsey, after an MBA, after being a lawyer. He's done a lot of great things. Truls and Clarksons have been extremely active in offshore wind, and some recent wind deals he's worked on include OHT's US $60 million IPO, Will Wilhelmsen Holdings investment in Østensjø's offshore wind SOV, CSOV fleet of 6 vessels. And as you may be able to tell from his double moderator duty, Truls is a great multitasker. What you probably do not know is that he's actually taking a 2-hour break from deer hunting on the Norwegian west coast to moderate these 2 panels. We're delighted that Truls could be with us today to lead this discussion. Truls, I turn it over to you.
Thank you, Mike. You weren't supposed to tell people that I'm not in the office today, but anyway, very happy to be here. Thanks to Marine Money for organizing this event. Always great pleasure and very professional way you're putting this together. So thank you very much. This next panel consists of players within the industry, a very high quality panel. I'll ask the participants to briefly introduce themselves before we address some of the themes that I thought could be relevant and interesting for today's panel. I think you can see all the panel participants. Do we have Rune and Magnus also present?
I'm here, Truls.
Perfect, great. So it's not only a very good-looking panel, but they also represent some of the most active players in and vessel owners in the industry, and a panel that has come to market with some of the most modern and capable assets that we will talk more about. But first and foremost, we are very happy to have Ørsted represented here. And before letting also OHT, Scorpio, and Østensjø introduce themselves, Murtada, would appreciate a short introduction to those who are not that familiar with Ørsted and your exposure in this industry.
Yes, thank you, Truls. Can everyone hear me?
Sounds great here.
Perfect. Okay, my name is Murtada Al-Jaburi. I have been with Ørsted for almost 10 years, and I'm mainly sitting in the construction organization, basically where we are responsible for the execution and the build out of the offshore wind farms. And my focus area is basically light logistics, where basically I am responsible on a global plan, so developing all the 4 regions in Ørsted, North America, Asia Pacific, Europe, and continental Europe and UK. That's 4 regions, basically developing the technical side on light logistics and also the contract signatures of all these light logistics vessels. And light logistics in Ørsted encompasses different types of vessels, but mainly it's accommodation offshore. So that is jackups, light lift boats, as you call them in the US. That is the crew transfer vessels that are mainly the taxis offshore. And then we have the safety vessels. We can't call them guard vessels in the US, so they are actually called safety vessels. And also we then have the SOVs. But in construction, it's actually not new build SOVs. It's mainly refitted PSVs, so basically existing tonnage that we are looking into. And also we have the helicopters in my category as well. And this is basically my responsibility to develop the technical side for all our projects in the US, provide the budgets, and also do the contract signatures of these different aspects. Yeah.
Great, thank you, Murtada. Kenneth, can I ask you to briefly introduce Østensjø and yourself?
Sure. Good morning or afternoon, as you see here. My name is Kenneth Walland. Background as a shipmaster, been in Østensjø management for 25 years plus, and last 5 years as CEO. For those of you that do not know Østensjø, we are based in the west coast of Norway. Been in operation since '73. We are operating into 4 segments, which is towage, accommodation vessel, offshore service vessel, and lately offshore wind vessel. The offshore wind vessels we are now branding in a newly established company, or this year, Edda Wind, where it was mentioned Wilhelmsen came in with a 25% stake this fall, and also have an option to increase to 50%. Edda Wind has 3 vessels in operation, including 2 new builds from 2018. And also right now we have 4 SOVs, CSOVs under construction for delivery 2022. And worth mentioning there, among others, they will be prepared for zero emission operations based on hydrogen.
Great, thank you. David, can I ask you to do the same?
Thanks, Truls. Yes, David Morant. I had a 15-year career in fund management and investment banking before joining Scorpio just over 5 years ago, based in London. Scorpio is a company with many decades of history of innovation, of shipyard ownership, and of across multiple vessel sectors. Over the last 10 years, Scorpio has probably been one of the most significant shipping companies in terms of accessing the US capital markets. We have 2 US listed companies, Scorpio Tankers, which is the world's largest single owner product tanker company, and Scorpio Bulkers. On August the 3rd, we announced a significant, probably the most significant transition and pivot of Scorpio Bulkers away from being a bulk carrier owner and towards being a wind turbine installation vessel owner. We have, since that date, managed to sell a significant part of our dry bulk fleet that continues to this day, and you've seen probably announcements as recently as this week in that regard. We announced an LOI with DSME at the time, a yard we've many years of relationships with and a significant legacy customer relationship with, for 1+3 options wind turbine installation vessels, which we've announced that we expect to be delivered into the market sometime in 24-25. So I'm here to represent our listed company, SALT, on the New York Stock Exchange.
Great, and lastly, Rune Magnus.
Yeah, thanks, Truls, and thanks for inviting us to the panel. My name is Rune Magnus Lundetræ. I'm the executive chairman of OHT. Back in September, we raised, as was mentioned earlier, $60 million and listed the company on the Merkur market in Oslo. Our fleet is comprised of 5 heavy transportation vessels. We have transformed the company from servicing the oil and gas sector to now focusing more and more on offshore wind, and we will leave the oil and gas business altogether in a few years' time. We also have 2 vessels under construction. One is a foundation installation vessel called Alpha Lift 1 that's being constructed at the China Merchant. That will be delivered end of next year, so end of 2021, and will go straight to work for or at the Dogger Bank project. We also have 1 turbine installation vessel called Wind 1. We just signed the contract last month, also with China Merchant, and that will be constructed over the next 30 months. Then we have some more options, both on the turbine installation vessels and the foundation installation vessel. So we represent a couple of the segments in the value chain in the offshore wind market.
Great, thank you, Magnus. Murtada, I think I'll start with you. You have probably the longest track record in the Ørsted, having the longest track record in this industry, and probably also the broadest exposure in terms of market segments. How would you describe the market condition for offshore wind right now from a developer's perspective, and what are the key trends that you see, and how is Ørsted positioning yourself to take advantage of the development, both geographically and also from fixed to floating, etc. Can you touch upon that?
Yeah, of course. I mean, I will obviously keep it to the light logistics part, but I can also come into the heavy part. I mean, as you know, Ørsted is developing 10 offshore wind farms as we speak in the US. So we are quite aggressive in developing both in the Northeast Cluster region and in the Mid-Atlantic region. And as you can see, I mean, the competition is getting more and more harsh. We have a lot of oil majors now also entering into the US market, trying to win wind farms. And obviously, we love the competition, so that's fine. I think it's mainly the supply chain, at least on the vessel side, that we really need to focus on, which is, I think, will become a bottleneck in the near future. So if you look at all the different developers, a lot of the projects will take place actually in parallel. A lot of the developers are waiting for their permitting, which is, as you all know or read in the news, it's being delayed and delayed. And now we have a bit more security, maybe because of the election now. Maybe there will be a bit more scrutiny and maybe acceleration of the permitting process. But I think that is actually the highest risk for us at the moment. It is very hard to commit to any contracts if we don't have a bit more certainty, at least on the permitting and where that is going. So at least I spend a lot of my time reaching out to suppliers, engaging with them, educating them, and that is mainly US suppliers, operators. And I think this is the first time where we in Ørsted not only engage with the operators, but actually also engage with the shipyards. That is something that we usually don't do because we don't own any vessels. We basically charter the vessels from operators, and they have the responsibility to charter the vessels directly from the shipyards. However, in the US, a lot of the developers are trying to win bids by, committing to local content. So we have to build vessels in different states. And at the moment, we have commitments to build, vessels in the Northeast Cluster region and also in the Mid-Atlantic region. And if you look at the shipyards in the Northeast Cluster, there is actually not many shipyards that are capable of building aluminum catamarans, crew transfer vessels. The same applies with SOVs or even refitting PSVs. So that is a major challenge for us. Actually, a fun story that I experienced with my team was we placed an order of building a CTV in the Mid-Atlantic region, and actually the contract was terminated because that shipyard got a military contract. So that is also a very high risk for us, that a lot of these shipyards, if they get a military contract, they will just take that on board rather than building our vessel. So we had to find alternatives to relocate that vessel and complete it.
Thank you. And I'll move to you, Kenneth. You have contracted, I think now, 6 purpose-built accommodation vessels or SOVs, CSOVs in Europe. I'm sure you have thought about the US and how to make an entry into that part of the world as well. Can you explain a little bit what you've done and what are the barriers you see to entry into the US in competition with local operators and competition in general?
Yeah, of course, Charlie in his paper touched into to some of the challenges, and for sure there are challenges. We now have a few years operation as SOV, CSOV operator in Europe, and also, as you mentioned, building new builds. Of course, Jones Act is one of the challenges in US to establish there. There we have teamed up with Foss Maritime, a salt chuck company in Seattle, who are a company we know from the past, and also feel we share a lot of same values with them. Of course, they are a very experienced ship builder and operator in US, and we are totally dependent on their contribution. So we feel a team with our experience as SOV, offshore wind vessel operator, and design building of such vessels, teamed up with the US experience is the key to success. But of course, the cost side of it is definitely also a challenge. I mean, building in US is well, you could say it's double price of Europe, and of course also some of the requirements linked to Jones Act, US fully US operations and so on will also increase the OPEX. So there are actually challenges from the building process and onto the operation process. But of course, this will be solved as the market becomes more mature, and we are able to start this type of operations.
Thank you. So building cost is obviously a big, challenge and a hurdle, and it's hard to point to exactly what is the premium you have to pay in order to build in the US. But I can place the question to David and Magnus as turbine installation contractors. What consideration, you place orders in China and South Korea respectively. What were the considerations you made in terms of approaching the European or international market the way you did, as opposed to starting in the US, where the future development and growth is getting more and more transparent, and the opportunities there in terms of at least so far less competition with Jones Act vessels, for example. David, do you want to start?
Yes, thank you, Truls. I mean, I suppose for us, first off, the reason for South Korea, for us very specifically, and it's not a negative against any other region, but we have a significant amount of experience there. We've ordered, in fact, several $1 billion worth of tonnage out of South Korean yards. We've got a significant experience with those yards. And I think the necessity to deliver a complex project on time and on budget is almost one of the biggest obstacles that the industry faces short term. And I think we wanted to stick with an area where we are very pleased with the quality of the product we receive. We've got extensive experience, and I would add to that, importantly also in terms of export credit, the Korean ECAs are an area where we have a significant collaboration over many years, and one we appreciate. And we're very, very pleased with the quality of the vessels that we received the other side. So the primary focus in the initial phases of this, to answer your question, Truls, is receive a high quality asset on time and on budget into a market which is, as Murtada already referenced, is already globally underserved before you even get to the US. What I would add, though, in terms of your question on the US, it's a natural place for us to go. We are a US listed company. We have US executives. I mean, a lot of the things that Charlie mentioned are natural progressions for our business in terms of where our capital providers are, where our senior management sits. And I think what's very clear from some of the answers you're getting from Murtada, from Charlie, from people who've been involved in US wind for a long time, is that there are still a lot of questions which need to be answered. And I think probably some of those have become clear over recent weeks. And I think as I'm alluding to, you could expect, and it's clearly a part of our development as an organization, that the US will play a significant part as our capital providers, as our management want it to, and our customers, most importantly, in the development of the business. It's a natural home for us as a US focused, US listed organization.
Thank you, David. Rune, Magnus, US versus Europe or rest of the world? What were the considerations?
No, I think we have one very important assumption that we have based our investments on. I mean, we're making huge investments here to take part in this industry, and one key assumption for us has been that there is enough volume of work in Europe. We have built our vessels primarily for the European market. However, that does not rule out us looking at other parts of the world. But if we didn't think there was enough scope of work for us in Europe and enough projects and developments there, we would probably be much more reluctant to enter into this industry. So I think the short answer is we are European focused for time being, but we are also looking at certain projects for certain clients also outside Europe. But OHT is based on the European market.
Okay, Murtada, from a investor point of view or capital provider's point of view, I know this is obviously a young industry, and which comes with risk to investors, given the development that we're seeing, and some concepts may not even be have been proven to its full extent yet. So it's natural for at least part of the capital coming into the industry to look for places where there is long-term employment opportunities for tonnage servicing the industry. So far, I think we can agree that it's mostly within the SOV segment that we've seen longer term contracts. You have awarded a couple of 15-year contracts recently, for example. Can we expect the same in other segments, the way you see it going forward from you or from other clients? And why has there been a reluctance so far to go longer term for foundation installation vessels, for turbine installation vessels, for CTVs, when you have such a bullish ambition anyway?
Absolutely. I think every developer tries to synergize, or at least try to bundle its pipeline, so we can obviously allow for longer charter of vessels. I think O&M is a different phase. Ørsted as a developer, we don't just build out the wind farm and then divest it to other companies. Basically, we are in here for the long game. We are here to maintain the offshore wind farm for 25 years with our joint venture partners. So in the O&M phase, it is very easy to hire these vessels for long charter periods, like the one you just mentioned. We signed a contract with Edda and Ørsted, providing an SOV for 15 years. So that's a great deal. I think my major risk, or at least where I'm working at, is the construction area. It's the execution and constructing of the wind farms, and that area is quite, the pipeline always change, the execution pipeline always change. So there is a lot of risk there, and on top of it, we can't charter the vessels for more than 2 years. That's usually the construction period of a wind farm. It takes 2 years to construct a wind farm, and it is very difficult just to hire the vessel off the shelf. At least it's not a new build SOV. So I think us and many other developers, the only way we can enable that is by engaging with a lot of the oil and gas majors, at least operators in the Gulf of Mexico, trying to find solutions. I mean, we are using our partners in Clarksons as well to assist. We are talking to our partners Østensjø that we usually hire in Europe, to see if we can find solutions in the US by basically joining forces with these operators in the US. So that's a huge risk for us. And even the existing tonnage that exists in the Gulf of Mexico, it might not be suited to operate in the Northeast cluster because the weather environment is just different. So these are the topics that we keep discussing with the operators to try to educate them, to basically give them the notice that we are very interested, but we need to have very solid vessels with robustness, and basically them operating in the Northeast cluster under harsh environments. Yeah.
So that's understood. So, but even for shorter term contracts, could we see in the future that you commit to a vessel before construction has begun, or will you sit on the fence and wait until closer to delivery? So the first risk and investment by investors would need to be on speculation.
I think obviously it's very difficult in the US. The risk is there and we have to take the risk. We have to bear the risk. We can't wait till we make a final investment decision, because if we wait, we will not be able to build the vessels in due time, and then our construction pipeline will just move. So some of the investments we have to carry out before the final investment decision. And the way we might do it is obviously looking at the risk, the investment profile, how big is it, and then basically, you know, get our at least the steerco in Ørsted to approve that. But the way we have done it, at least in my program, is that we engage with the shipyards, we engage with the operators to see what is the lead time of actually building vessels, and basically put that in our schedule. If the lead time needs to happen, you know, CTVs, they take around 20 months to fabricate in the US. That means that the contract needs to be signed 20 months before the vessel actually mobilizes. The same with the refitting of PSVs or building SOVs. All of that needs to be taken into account.
That's an important topic there. This goes to you, Kenneth. In the accommodation segment or walk to work, or SOV, CSOV, as we may call it, there's only probably half of the current demand is addressed by purpose-built SOVs / CSOVs, you know, spec designed and built for offshore wind. Then investors may be concerned that you have the overhang from the oil and gas industry with the PSVs being converted, or light subsea vessels being converted into offshore wind to compete. How do you see that threat? Is it real? And to what degree will that be a potential problem also as demand grows even bigger?
Well, I definitely don't see it as a threat, because we are also owner of oil and gas vessels, and it is an opportunity, and it's been actually a good alternative market for a lot of these vessels and owners the last few years. But in our opinion, the special purpose built vessel will be the most attractive vessels for the longer contract, talking about the O&M market. And that's for several reasons. Charterers like Ørsted here have very strict requirements and specification. The special purpose built vessel are I would say much more efficient, and maybe even more important, they have a much lower energy consumptions, whether it's fuel or anything else, and thereby also emissions, since we apply modern technology. And of course, that is also a direct cost saver for the operator, maybe in the range of 4,000 to 5,000 euro or dollar a day in difference from a new build and existing vessel. So and also we feel there will be opportunities for both. There will not be enough new builds to cover this market. So there will be a balance and requirement also for the oil and gas vessels. So I think we can live side by side, more or less. And our strategy is to focus on the purpose-built top-notch vessels, meaning ultra-low zero-emission vessels, and we see they are well received in this market. And for instance, the first two vessels we are building now have secured already by now 15 and 10-year contract respectively, and that's a couple of years before delivery. So I think again there will be opportunities for both special purpose built new builds in the O&M market and in the commissioning part of it, the shorter contracts for both type of units.
Right. Thank you. I think time is running out. My last question, I guess, to the turbine installation companies on the panel. The capital markets have seen quite a few projects recently. A couple of IPOs, one in progress, and earlier on, Fred Olsen or Bonheur. And everybody's obviously, focused on future utilization and day rates. And it's not like bulk shipping or tanker shipping, where you can read current or historical rates of a report. So having, I'm sure, been around marketing your units over the last few months, what indicative day rates can we expect to see over the next 2-3 years for wind turbine installation jackups? Magnus, can you share some color or some insights?
I don't think I should, speculate about day rates in a setting like this. But I like to reflect on a few points that I think are important and is relevant. And that is, this type of industry where there is massive investments needed, both from the developers and the service providers. That means that companies like OHT and the other panelists need to take a significant risk in order to position themselves to win work. I think it's extremely difficult, if not impossible, to be a credible tender candidate for work if you do not control or own the asset. Maybe I'm wrong, but I think that's at least our understanding of the tender processes and how to be pre-qualified and so on. That means that we have to take a pretty significant risk in terms of investing significant amounts of capital to position ourselves to be able to win work. And for me, this is about risk reward then when it comes to day rates. If we're going to take this risk and invest this money and position ourselves to win this work, it should be a fair compensation for that, but fair for the developers as well. But I think it should be something that reflects the risk we take on to take part in this industry. And I think there's going to be capital for some, but not capital for all, as this industry develops in the next few years.
David, if my calculator says that you need $200,000 a day to make a decent return on a $250 million a unit, are investors going to be disappointed or happy?
So you're asking me the same question you went to Rune Magnus with, but slightly more angled. Look, I think first off, the thing I'd say initially, I echo a lot of what Rune Magnus said there. I mean, firstly, we've approached this clearly because we believe as a transition, this is a great opportunity for our shareholders. It's positioning the company into a market, a global market, taking nothing away from the US, but a global market that's growing on our numbers, anything between 15 and 20% compound out to the end of the decade, with a significant and indeed increasing amount, I would say, from the perspective of the vessel owners, of visibility around that growth trajectory. If we ever wanted a dry run or a test of the resilience of the appetite of that investment, it would have been the last 9 months. And we've seen nothing but increasing and the increased appetite, increased pipeline in terms of investments. Our job then really is relatively simple. It's to deliver the best asset on time and on budget to our customers, and one that importantly installs more turbines quicker, safer, and more cheaply than any of the other machinery which is available. And in doing so, we meaningfully increase the economics for our customers, and we reduce significantly the time to first power. And that's what we have been focused on. We've also been following our customers. Murtada mentioned earlier the oil majors. We're a major counterparty for all of those customers. We operate, as I mentioned, a highly sophisticated fleet of tankers that face those customers every day in terms of HSEQ and the other requirements. So the way we've looked at this is not, what kind of rate can we get? Clearly, we need this to make sense for our customers, but we're providing what we believe is a sophisticated solution to increasingly sophisticated clients into a global growth industry, and we believe that the returns for our shareholders from that will result.
Very good. Mike, sorry for stealing 5 minutes of your Q&A.
No. Actually, it's perfect.
You'll get it back to the session.
No, it's perfectly well done. Very exciting. I wanted to just ask one question that I had from the online chat. We had a lot of questions, but I think we have time for one, and it's maybe a little bit of a setup for the next panel that you'll be also moderating, Truls, and that is from the ship owner perspective. Are you seeing is this business different in terms of capital interest, whether it's the investor side or lender side, versus the traditional shipping sectors that you've done in the past? Is this sort of greener business line, does that change how the interest level, or what's your experience with that?
Is that to me, Mike?
That's to David, Rune, Magnus, and Kenneth, as people that have been in shipping also and now are kind of in this new world.
Well, I suppose we've got the T-shirt on that right now, because as a business in transition, we're seeing both ends of that. So clearly, our view of this is that given the visibility of the growth and what we believe will be durable barriers to entry, we do believe that the cost of capital, the investor appetite, by that I mean both equity and debt, over time will represent the higher, more stable, more predictable returns which we believe are on offer in this industry. I think I would probably add to that yes, of course, green finance is a very important part of that, and we've seen some important policy changes just over the last week, 10 days, which I think would give you some confidence around the direction of travel there. I think the third thing I'd add is that we're bringing, as most of the people in this panel are, we're bringing an industry to the US markets, and in our case, the US capital markets, for the very first time. This is actually outside of the US, an industry which is 15 years plus old. There's been a lot of capital made, destroyed, a lot of lessons learned. So we feel that we are on time coming into the US capital markets with a sophisticated industrial solution for a growth market. And yes, of course, to answer your question, Mike, there are some substantial differences to the commodity shipping markets, but we're very proud of our heritage there, and we believe it's something we can leverage, whether it's the billions of dollars we've ordered out of Korean yards, the experience with export credit, the highly sophisticated HSEQ requirements, and the business and chartering relationships right to the top of the new entrants, namely the IOCs that are coming into this industry. So the differences and the similarities in equal measure here, I think, are probably important.
Thank you. Do Kenneth or Rune, Magnus want to take a shot at that? Otherwise, we're ready to wrap and we'll set up for the next panel.
If we have a minute more, yes, I agree to what David says, and we also observe the same, that of course this type of industry and vessels we are building for offshore wind is definitely easier to finance. I didn't say easy, but easier to finance than the oil and gas and the rest of the part of industry we are in, and also of course the counterparty risk with solid wind operators for SOVs, long contract, make this a good investment. And also the requirement from the operator and the owners now are going more and more in a green direction. And of course the industry is renewable, and the vessels are becoming more and more ultra low and zero emission object, and by that is within the green fund range.
Thank you. So I think with that, I'm going to thank you all for joining us. It's incredibly exciting what you're talking about, and to watch the development of this over the coming years is something we're excited to be a part of. So thank you all. To the audience, it's definitely not a lack of questions, but time that requires us to conclude this session. So thanks to everyone. We will send you all a replay link so you can see it again. And we're going to meet back up again in about 5 minutes with our financing panel. So thanks to everyone. Again, if you're not signed up for that already, you can go to the Marine Money website, hit the New York finance form, and there are links to register for that. So thanks again to the panel, and we'll see many of you again in 5 minutes time. Thank you, everyone.
Thank you.
Thank you.